Alrighty, guys, you saw the title of the video. We have to break down 5 breakout stocks that I'm looking at right now in the beginning of August of 2022. So without further ado, I don't want to waste any time in this video. If you guys find value, hit that like button, subscribe, get your 12 stocks from Webull with any amount deposited, and your 10 stocks from Moomoo with a $100 deposit. All of those are linked down below. And with that being said, cheers. Let's dive right into the video. So check it out. Stock number 1 is Starbucks, and we covered this stock recently. They just reported earnings, and we can see here they did pretty well. And now with Howard Schultz back in the the leadership position, I feel like Starbucks is poised to start moving back in the right direction. We've seen some struggles in the company over the past couple of months, and heck, there's still struggles right now. But a lot of companies are struggling right now, and I feel like Howard Schultz could pull them out of this, as he is now the new CEO, and he was CEO. If you guys didn't know about that, you got to go look all that up. And we can see here Starbucks did break out a couple of days prior to the earnings. If you take a look here on the 4-hour chart, we ended up, and honestly before that, but we didn't fully start breaking out until a couple of days ago. You guys can see we did break out of the moving averages in the end of June, as the entire market really started reversing middle end of June. And since that point, we've completely been, breaking out for the first time above the moving averages in a good couple of months. And just recently, like I said a couple of days ago, we really started breaking out as we took out $82 a share, $83, which was resistance stemming back all the way from the beginning of May, which is a very, very good sign. So Starbucks, technically speaking, is reversing hardcore right now. And by the looks of it, it is not turning back to the downside. So that means there's only one way to go, guys. We're going to continue trucking along by the looks of the technicals right now. So if I draw out some levels to the upside, we have about one gap's at $92. All right, we have another one here at about 90. So where are we now? 85, 75, $86. If we see a good week next week, this could be this could be moving to the upside. $88, $90, and if $90 breaks, the next gap from there, $92.50, $93 a share. This looks pretty strong. And again, with Howard Schultz earnings, I think there's bright quarters ahead. Maybe not the next quarter, the quarter after that, but in the next couple, let's say the next year or two, I feel like we're going to see a turnaround. This stock, I like it, especially, of course, in the long term, but here in the short term as well. We shall see how it ends up playing out. Another one is Costco, which you guys probably know. Costco has been breaking out since the end of June, early July. It's been moving out of these moving averages, and that's when we had the Golden Cross as well, early on in July, when we saw the 50 break above the 180 SMA here, and we did pull back a little bit, this past week, which a lot of stocks did. Makes sense. Overall market cooled off. Costco came down from 550 to 539, and we're right by the 50 moving average now on the 4-hour chart, which I do believe potentially, keywords potentially, guys. Of course, none of this is guaranteed, nor is this financial advice. I'm just breaking down stocks based on what I'm seeing, right? I feel like buyers could potentially come in 530, 535, 540, where we are now, right by the 50 SMA. And if they do, and we start breaking back towards 550, maybe even higher than that, the next gap I'm seeing here is 565, 570, and then we'll talk and see where it can go from there, because I don't want to get too ahead of myself. But all right, if 575 breaks, what are we looking at? 600, 610. So keep your eyes out on Costco and Starbucks, and we also have to look at Home Depot and Lowe's. Look at these stocks, guys. HD has slowly been reversing. This was, it was in a clear downtrend under the moving averages for the entirety of the year up until just about 2-3 weeks ago. And just about 2-3 weeks ago, in the middle of July, is when we started getting that Golden Cross and the reversal here above the moving averages. And now we're at a critical spot. We're at a point where Home Depot, it is breaking out, but not quite yet like Starbucks, not fully breaking out, because we're still under the highs from a couple of months ago. And, 310 is that high from a couple of months ago where we closed today. And we've struggled at that point ever since the end of March, early April. So I feel like if Home Depot could get the buying pressure out of 310, especially out of 320, watch out above. I'm telling you, from there, 340 could be next. If I draw this out, you'll be able to see it. 340 is a big level on Home Depot on the upside. If 340 breaks, I mean, hey, we're talking 375, but let's not get carried away. We have to wait and see what happens at 310 first, then 320, and then we're going to loop back around, in a couple of videos. So make sure you guys subscribe, because we will be doing follow-ups, and we do follow-ups all the time on these stocks. I mean, it's not like I talk about a stock and then forget about it. I never talk about it again. I mean, we always talk about, I don't cycle through the same 5 stocks, but we have a group, a basket of 30, 40 stocks that we talk about all the time, and they're always moving, and we have to do updates on them, right? So make sure to subscribe if you guys are interested in that. So let's take a look at Lowe's. It's in the same scenario. It's at a multi-week resistance right now at about $200 a share, although it is reversing. It's been reversing above the moving averages, golden cross. So right now, I'm going to set on alert at $200. Mark is at or above $200. Boom. I also have one at 205. So if we start getting momentum into the 200s in general, low 200s, there's going to be a big reversal coming on Lowe's. Am I calling for a move back to 260? Not necessarily, although long term it's probably going to get there. But in the short term, am I calling for a move that high? No, I'm not. But if we start moving past 205 to 200, could we see momentum towards 215, 220, the next gap? Abso-freaking-lutely. So for that reason, I'm watching Lowe's and Home Depot. And the last one is probably my favorite out of all of these. And don't get me wrong, guys, these stocks that we're talking about today, they're all fantastic companies. All fantastic companies. And I might ruffle some feathers here, but PayPal out of all these, and I'm taking account valuation here as well. If we're talking about what the best company is, that's a big debate. I mean, we have Starbucks, Costco, Home Depot, Lowe's, PayPal. These are all cream of the crop companies. But if we're looking at valuation as well, along with the companies, because listen, when you're buying a company, you're not just looking at the company itself, what they sell, their products, services. You're looking at what you're paying for the company. What is the price tag attached to the company at that point in time? And that's also known as the stock price, right? And the stock price is ever so changing. And I've been open about it. I think Costco's overvalued 100%. I think Costco's overvalued here, even though I'm looking at it as a short-term trade, guys. I think it's overvalued long-term. I think Home Depot and Lowe's are arguably a little bit still overvalued too. Starbucks, it's kind of in that, I'd like it more in the 60s, 70s. So I'd say it's a little bit froth. I don't want to say frothy, but it's not cheap. Let's put it that way. So if we're looking at all these companies, this is the one that I believe is, of course, cream of the crop company, at least in my opinion, and it's cheap. I mean, it's not dirt cheap. It definitely was, or if it were to get to $50 rather, it would be dirt freaking cheap. We're talking pennies on the dollar. Maybe not pennies on the dollar, but quarter on the dollar or whatever. You're picking up a good value at $50 a share. And in my opinion, $50 to $100 a share on PayPal is great value for the long term. And that's what I'm saying. Right now, I think out of all these, PayPal is the one that, and let me know your thoughts in the comments. I might ruffle some feathers, but out of all these, if I had to pick one for the long term at these valuations, I would probably pick PayPal, to be completely real, for the biggest return in the next couple of years, in my opinion. And who knows? I could be wrong, but that's what I'm picking. And you guys can see, long-term aside, short-term, it's also breaking out. It's reversing. We hit $67 a couple of weeks ago. Now we're above the moving averages, golden cross, all that good stuff. We're trading at a multi-month high, and we're a little bit under the $100 high, $105 high from after earnings. We're at $95 now. But if we start gaining steam past $105, this could easily blow up to 120, 25, maybe even further, and we'll see what happens at that point. So what do you guys think? Let me know your thoughts, as always, in the comments. And if you had to pick one of these stocks, I know a lot of you are going to say Costco, but please take into account valuation. What do you think? If you had to pick one of these stocks for the long term, Starbucks, Costco, Home Depot, Lowe's, PayPal. Which one are you picking? Let me know your thoughts in the comments. And don't forget to check out my Patreon if you guys want to join that. You got all my buy, sells, call outs, morning videos, exclusive content, more access to me. That's linked down below. And you could also get your 10 stocks from Moomoo with a $100 deposit and your 12 stocks from Webull with any amount deposited. If you guys want some free money, hey, it also helps out the channel. That's linked down below. And with that being said, I'll catch you all in the next video. Thanks for watching as always. Peace out.